Okay. So looking at the weekly analysis. Now, previous weekly closing a bearish doji after a big move towards the downside, giving us an indication that there is still a push towards the upside that price is trying to make. So could we see that push this week? Definitely possible. We could see a weak bullish move towards the upside, or we could see that top wick forming and Friday is giving us a small sell, right? Giving us a little bit of a wick towards the downside. Now, since looking at the daily has given us a confirmation that price is reversed exactly at 1907 given through the monthly structure, we know that price is going to try and make the effort after trying to go up top 38 possible area of rejection. Price goes up, taps in, gets rejected, breaks through that area, and finally closes below. So that is my expectation of the weekly right now. If the current weekly goes up, pushes down, hopefully closes somewhere within this range here, we'll find support on the left hand side and an area of support right there on the weekly. So price closing within this range is expected that breaks us through a monthly area of support, and then eventually looking at a break of structure there, another here, and then a drive down. So it is a drive down, but it's not an easy drive down. Okay, so you have to be, if you're trying to take short-term trades or you're trying to take a couple days or 3-day swing, factor these things in. Look at the market structure. What are the areas where the weekly has rejected, taken support, right? Price coming down, taking support within this range, going back up, coming back down. Again, taking support at the same range, going back up, getting bullish. So price has gone bullish in this range before. Is the current weekly preparing to go bullish? Once again, recent historical structure is telling us there is still a good level of rejection there. So price has rejected in that space. We have taken our time to break below that range and close below. So us expecting that price is just going to drive up is not a direct expectation, right? So let's look at the expectation of 1950. Why are we not considering 1950? So there are multiple reasons that we're looking at the entire structure and then considering our moves just based off of it. We'll look at all possible levels, right? So again, we're looking at the market structure, we're looking at what technicals are telling us, and then we're looking at what, again, if you look at the monthly and you look at these wicks here, why not? Why can't we go up until 1950? Right? It's the daily and the weekly that's going to give us the evidence of why we're not expecting 1950 right now. We still have the scope. We can definitely go up all the way there. You know, there's a powerful doji right there. Why can't we go up to 1950, even possibly 1960? Why not? Right? Again, there is scope, but we need to look at the reality on the lower time frames and look at the structure formation there, which we are about to. So when we look at the weekly right now, again, my expectation 36 and push down. If you're looking at further movement towards the downside, again, not an easy move, right? We have a structure right there, so let's mark that structure here. And if you look at it, we almost made an attempt to drive down, taking support right here. So let's look at the left-hand side and see the previous weekly's bottom. Where did it take support? Looking at the left-hand side, there's another bottom wick right there. Left-hand side, nothing much. A bottom wick right there. Okay, so nothing major on the weekly, right? It is a minor area of support. Price taking support, going back up. Okay, on the weekly, there's nothing much there. Let's look at the daily. Daily there is. So that is a good area on the daily. So daily giving us that push up. Now, is there enough structure for us to just break above? Price has gone bullish within this range on the daily again, right? So the theory of it not being able to go to 1950, you can't directly say it, that it won't go to 1950. But the realistic expectation based on a symmetrical range that has been broken recently is evidence enough for us to consider that price first has to continue its decision to go all the way down. Now, can price reverse here? Why not? News can do anything, right? But pure based on structure, right now, that doesn't seem plausible. We're kind of easing through the summers. So through the summers, demand picks up. What's changing economically? Economic easing happens within the summers. The downfall of economy happens during the winters in the West. Why is that? Again, winters slow down economy in terms of demand. Buying and selling gets slowed down. Manufacturing slows down. There's a bunch of things that impact how markets react, right? The expectations, the requirements, the needs, like everything changes during winter. On the other hand, in Asian markets, that is not interrupted in the same sense, right? It changes there. So Asian pairs in that situation operate completely differently than pairs like Euro USD or like Euro USD GBP. They operate a little bit differently. The war will have its own set of impacts. So we're coming closer and closer to winter, and the more closer we get, the more concerns are there. And as a part of the ECB conference that happened last week, we saw the ECB chair talking about the concerns around, natural gas, heat being the main part of their concern. They have increased reserves. Every Western country right now has increased their reserves. The war impacted that. Russia being the biggest supplier impacted everything that happened, sanctions and so on, impacted how they operate, how they can survive. They've increased their reserves, but will that last? Now, if people go jobless, if revenue is not separated, even though they have reserves, it's gonna be used up. And if people are jobless, the usage might be higher, but the repayment might not be as much. So the economic return on, so the supply and demand situation, everything will be credited. And there would be need for more packages. There would be something or the other sort economically that would have to help these people survive the winters, because they can't let their population struggle during winters. Politically, it does not help them. So what they're going to do? Well, they're going to try and make the best bet they can, right? So it's a political game in that situation. So where winter comes in, economy is going to struggle. And when that happens, that's where the uncertainty comes in, because we're talking about trying to push down, 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 and down. Structurally, we have indication telling us that price could still reverse, try to go for the upside. But at the same time, we are on a monthly consolidation. And at the same time, price can still dip all the way down. But the probability of it just dipping down right now is not the best. So we need to see more economic conditions change. We need more news to come out this month to give us better indication. What the Feds are expecting, if that plays out, then everything that they're trying to do gives us an indication what the forecast could be for interest rates and how that impacts, right? Interest rate hikes don't help businesses because it increases their cost of borrowing. If it increases their cost of borrowing, they can't do business. That means they have to cut costs somewhere to survive because they have existing loans. And all of that has a huge impact. Venture debt has definitely is something that's gone up, especially in the past year. Now, venture debt wasn't the preferred choice of debt or fundraising. Now it has become, because lending through banks has become a little bit more expensive. So venture debt makes more sense. They're getting the flexibility to survive. And all of this gets impacted. That is something that we need to observe economically. So fundamentals will give us a different drive, and we need to monitor it on day-by-day basis. But looking at the current weekly, the previous weekly, we could consider, okay, this week is just going to go down. It's going to fill this wick. And again, wick fill is something you can definitely consider as a part of your analysis. We expect price to go down, but we are also expecting price to create that top wick on the monthly. So what happens if we just keep driving down? There's a high chance that this monthly could just flip all the way up, try and go up all the way up, right? Challenge the highs pretty much. So The expectation that price is just going to keep driving down, giving us a lower low, is something that you should be very careful in trying to take that analysis. Current weekly is giving us a good indication that price is currently creating a bottom wick, trying to go up. It'll go up, create that top wick, and then this is where we'll be looking for sells, right? We're already taking sells. We're already looking for more sells up there, already swinging on the top, hedging at the top. So we have a bunch of sells running. We'll be very cautious in taking these trades. So when we are looking for entries, look for sells in this range here, right? Between 1937 and 1928. Look for price movement and then take sells based on it. We'll obviously post trades. We look at the daily chart and identify that. Lower, going towards the lower side, market structure has enough support. And when we look at this kind of support being there, we have to be careful in trading there. Okay, so just don't follow the trend. Trend is not always your friend, because trend will lead to a lot of overtrading. It will also not give you the best reversal areas because you're just looking at the trend. Person who trades on trends knows that there are a lot of trend lines that can be formed, and you cannot confirm or accept that, okay, this is the trend line that market is following, because it can be broken and a new trend line can be formed any day, any week. So you have to be very, very careful in taking that, right? So if you look at the current weekly, what trend lines can be formed? This one has 2. If I consider this one, now we have 3, right? 1, 2, and 3. So our current expectation, the current weekly could come up and reject. Well, we could reject pretty much at the same level, 33, right? Now, weekly trend line giving us an indication that we could still reject at 33. So let's look at the monthly. Our expectation that price could reject at 33 is validated so far. Weekly trend line giving us the space to take that trade. So 33, plausible entry, right? So we'll go to lower time frames and look for that trade, right? Now, this week, I would be expecting price to probably, we could look for support at 1917, go up. Let's look at the daily. We are at 1917, 1913. Yeah, 1910, 1913 is the level that I would be looking for. Price tapping into this range here, area of support, price takes support, 1913, goes up, rejects, and then comes back down, right? So the current daily is also giving us that indication. So this week, us expecting price to go down, could go up, could just be today and tomorrow. In the next couple days, we could see that wick up and then drive down, because we don't need bodily closures above to get that wick. We just need price to drive up and give us that wick. We don't need bodily closures there. Bodily closures towards the downside make more sense. What happens if we see a bullish closure here? Well, we're getting a bullish closure on the weekly near a trend line. We've gotten closer and closer to the trend line, and if we do not dip and get away from this trend line, there's a higher probability of us breaking through this trend line. And given current conditions, as market is easing, this expectation is something that only news can change for us. So that's why my expectation of price just driving up to 1950 is not valid. So 1950, technically, we are not seeing any indication of us going to 1950 yet. We need some change in technicals or in fundamentals to give us that indication, right? This week it could give us that. It could either give us the indication that we're going there, or it could just go there, right? We don't know. Technicals and ongoing fundamentals till today, till this hour, tell us that 1937 is going to be the best, the highest it could go. 1933 is where we're looking at, right? So let's see what we get. Okay, so weekly expected highs 1937, projection closer between 1933 and 1937, all the way down. I would love to see a break below 94. However, price today's this week lowest I would expect is, yeah, I would expect the lows to be 1888 and looking for rejection at that area again. So that's the expectation. Highs being 33 and lows being 88, 89. Okay.